Hello traders and welcome to another video review. Today is Friday, June 5th, 2026. Let's take a look at the economic calendar for today. Today's calendar is very rich with the major and high importance data release, mainly from the USA, because today is non-farm payroll Friday. So non-farm payrolls, average hourly earnings and unemployment rate, all of this data, they have a high impact on the market behavior, might increase volatility, and are scheduled for release at 2:30. The market participants expect the average hourly earnings to increase from 0.2 to 0.3%, non-farm payrolls to drop from 115,000 to 85,000, and the unemployment rate to stay at the same level of 4.3%. So please stay focused, stay vigilant around the 2:30, because major data release, economic data release for this week is scheduled to hit the market at this time. So that's about the major data release for today. Non-farm payroll Friday starts at 2:30, but now let's start with the technical part of this analysis and we switch to the charts. We start with euro dollar. So the euro dollar 4-hour time frame chart, as you can see, keeps trading inside of this range for the almost whole week, as the Fibonacci retracement has been the Fibonacci retracement tool has been placed for the wave 3 to the downside, right? And we got the 50% retracement towards the level of 1.1688. The market volatility decreased significantly. We've been moving around the 50 level, a little bit up, then a little bit down, but nothing major happened. No extremely oversold conditions, no extremely overbought conditions, not major situation here as we continue to move up and down and up and down. Let me just extend this channel. Okay, let me just extend this channel, and this channel should look like this. So we might have the bounce from the lower channel line, and the market is just trading just below the 1.1640 and then eventually be below 1.1669. Everyone is waiting for the non-farm payrolls data. British pound trading inside of the trading range, which is inside of the bigger trading range, as the wave C to the downside keeps developing. The current situation is exactly the same as on the euro dollar. We keep moving to the positive territory, then keep moving to the negative territory, oscillating around the level of 50. No major volatility change here on the British pound, so we are still waiting for some kind of a breakout up above 1.3485, 1.3499, or below 1.3408, or eventually 1.3366. Now the US dollar versus the Japanese yen, low volatility market conditions on a 4-hour time frame chart. This is our level. Let me just place my chart. This is our level of reference. So any breakout above 160.04, of course, opens the road higher. Nevertheless, the momentum is dropping lower. It doesn't actually mean that we will not move higher, but it's a close. Today will be weekly close. It still looks very, very nice, and it still looks very, very strong for the bulls. It looks nice for the bulls, obviously. For the best, not necessary, but for the bulls, this movement to the upside looks very, very nice. We got this period of the consolidation before, so that's nothing new. We got this period of the consolidation roughly around the middle of the May, something like this. It lasted at least 1 week. Now this situation might repeat here on the US dollar versus the Japanese yen. Nevertheless, the trend is still up. The gold market reversed from the level of 4,514, moved back inside the technical support, and then broke it. We might thought that maybe this short-term trend line will act as the resistance, but it was violated. Now the market is trying to bounce out or above this trend line yet again, but so far no avail. The local technical support is this level here, 4,423, and the breakout lower exposes the 4,366 swing low from the May 28th, 2026. Negative momentum supports bearish view, at least in the short term for the gold. S&P 500 keeps moving higher. However, just recently we got the biggest correction to the downside that we've seen. Recently we tested 7,515 and we tested this demand zone. The supply will be a little bit higher, so let me just place this zone for you guys so you can see what do I mean. This is the zone that constitutes the demand zone. It was made in three levels: 7,516, 7,503, 4,089. Any breakout below this zone is bearish. And as you can see, we have the first touch of this zone, and then the market jumps right back on. Now, this is the biggest correction we got during this up move. This is the up move. This is the biggest correction. Any movement below minus 2.41 is another bearish sign because we have overbalance and price of time. The bad thing is for the bulls is that if we break below minus 2.41, if this is still the swing high, yeah, 7,620, that's virtually nothing here. We will drop technically towards 7,387 or even towards this technical support starting at 7,332. So that's the situation on the S&P 500. A little bit of the pullback. Crude oil bounced above the technical resistance, moved towards 96.97 and moved back below the trend line. It looks like this gap that we have on the chart that is apparently made of a blue rectangle. Let me just, there you go, this is the gap. Might have been filled or almost filled. Nevertheless, momentum was positive. Now it's back negative 44 points. Market is below the trend line and we are looking for this area to be tested sooner or later. First technical support, not that strong but still is here, 89.73, then the potential gap fill zone, and then eventually in 84.40 as the technical support for the crude oil. And last but not least, the Bitcoin. The Bitcoin makes new low as we speak, and this is minus 26 point. Let me just take a look because I can't even see this. Minus 26 point something, to be honest, can't see it. 26.37. There you go. So that's a massive movement to the downside. Look at this. We got the bearish on the daily. It looks very nice. We have first bearish flag or bearish F pattern. Trend line is the orange one, so we have the bearish flag, breakout to the downside, bearish flag, a little bit of the trouble with the trend line broken. Okay, we are saved, but now we need to go higher, and then there is the first supply zone. You know it very well because we've been speaking about it many times. We hit the supply zone, first try, second try, third try, failed, failure and reversal. Aggressive sell-off, aggressive movement to the downside as the bearish flag basically expands lower. So this situation here hits the level of 16 points, let's say 17 points, and that's the lowest level since this low was made. But that was just a drop and then big buying candle. Now we don't see anything else but the best dropping like a stone, best dropping the Bitcoin, and the Bitcoin is dropping like the stone, lower and lower and lower. $60,000, exactly $60,001 dollars is the biggest technical support this year. Any breakout lower would mean that the Bitcoin is on the lowest level this year, and that bearish flag is telling me that that's not the end of the movement to the downside for Bitcoin. We might see some relief rally, but look at this, how much time it took for the Bitcoin to move from 60,000 to 82,000, and how much time it took for the Bitcoin to go back towards $61,000. So definitely there is only one group or one side of the market which is apparently winning since the all-time high top was made, and those are bears. So we actually dropped 50% more than 50%, I guess, from the all-time high. Let me just check this out for you guys. So that was, let's say, something like this, I think. Yes, 126. Okay, let's say, and that was the low, and this low is minus 52%. Definitely. So half of the gains will be gone at the level of $60,000, and it doesn't actually look like it is the end of the downside movement. That's the end of this analysis. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.